Hello, good afternoon, and you're watching Market Fatafat on ET. Now with me, Bani Motiwala, and Cheryl D'Souza will be joining in as well. But let's look at what the markets are doing, right? A very flip-floppy trade coming in the markets, nothing interesting. Look at the fall that has come in the market just a few minutes ago, and you're seeing that now the Nifty is down by 0.2% in trade. We're seeing that, that Nifty has been moving in the red and the green and making those moves, but not sustaining to those levels in the green, and still down and standing at 19,624 is what the Nifty 50 is at. Similarly for the Sensex as well, trading in the red as well. Both the benchmark indices are down around 0.2% in trade. Let's move on, look at what the broader markets are doing this afternoon as well. Broader markets too performing in tandem with the benchmark indices, nothing interesting over there as well. Mid-cap, small-cap space, both are down 0.2% approximately at those levels as of now as well. Nifty Bank 2 not holding on to good gains over there. Nifty Bank 2 down almost 0.6% in trade, and that's the major fall that we're seeing coming in as well. Now, what is doing well today in the markets? Metals not losing their sheen, and metals are trading. Nifty Metal is up by around 2% as of now as well. All these metal names are buzzing in trade, while Nifty Energy and Nifty Auto too standing up and holding on to the gains and the positive side in terms of the sectoral wise. Nifty Media, PSU Bank and FMCG are among the top sectoral losers as well. Advance decline ratio currently in the favor of decline versus the advances. That's a clear indication coming in over there. But on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals as well. And today, on the technicals, we have Kunal Bothra joining in with us, while from the research team, we have Lisa as well as Harsh joining in with us as well. A very good afternoon to all three of y'all as well. As always, I'm going to be starting with the first stock that is in focus, and that is going to be PNB Housing. Why is PNB Housing in focus? Today we have a brokerage note that's coming from Morgan Stanley, where they said that they're maintaining an overweight rating on PNB Housing, given a target price of 825 rupees per share. The previous target price was 720 rupees per share. So a hike in target price is what we are seeing coming in from PNB Housing. They believe that despite the adverse seasonality, retail asset quality improved on a quarter-on-quarter basis for PNB Housing, whereas the corporate GS3 was stable as well. So they have raised their FY24, FY26 EPS estimate by 5 to 7%. They expect a further re-rating as the risk perception diminishes, as well as with the continued demonstration of the asset quality improving. Now, the management is optimistic about its stocks with credit rating agencies for a potential credit rating upgrade, and that is what now we're keeping an eye out on as well. PNB Housing Finance has borrowed at a cost of that is at 50 basis point higher than HFCs, and they expect to reduce the gap by 50 to 60% over a period of time. So a hike in target price from Morgan Stanley is what is coming for PNB Housing. Let's move on to the next stock, and that is HEG, and that is a stock that we're keeping an eye out on the technicals. And Kunal, how are the charts looking like for HEG? Last 6 months already given a 63% return. What should one be expecting now?
Good afternoon, Vinny. So this seems to be a very classic move for both HEG as well as Graphite. Both these stocks, they move in tandem. HEG, we've seen a classical breakout coming. So, the stock in the last 2 or 3 months moved up, more than 40 to 50%. And in the last 1 or 2 weeks, the stock was going to a patch of consolidation. Now, interestingly, in this zone of consolidation for HEG, the stock was trading into a very tight kind of a band, almost a 2% to 3% trading band for a stock like HEG, which is considered to be a very high beta stock. We've seen the historical movements for the stock price, and the stock has tendency of going into exponential uptrends as well as very sharp corrections. So this seems to be now a zone where HEG is coming out of a minor consolidation, which lasted for the last many weeks for the stock price, and now it's looking quite strong yet again. So when we try and replicate the charts for HEG over the short as well as on the medium-term time frame, I would expect the stock could probably head towards even 1850 to 2000 odd levels in the next 1 to 3 months, given the kind of high beta nature and the chart patterns the stock is showing. So would be bullish on HEG. Even Graphite has a very similar kind of a chart pattern, and would expect at least another 10% upside for the stock in the very near to medium term.
At least the 10% upside from the current levels in the near term is what Kunal is expecting from HEG. But let's talk about one of those metal names, and that is Tata Steel. Lisa, you've picked out that one for us, and look at the up move, 3% uptick there. How are the numbers looking like? What's the details that we're picking up here?
Well, Tata Steel reported their numbers. The numbers were largely mixed. The revenue was above estimates. Margin came below estimates. Revenue on sequential basis, it declined 6%, and that was because of lower volumes, and that was partially offset by higher realization. Well, talking about their segments, the Indian operation, the adjusted EBITDA, that stood at 15,765 per ton, which was down around 2.5% on sequential basis. But their European demand, that was weighed down by economic downturns, and the EBITDA per ton, that was at a loss of $98 per ton versus $95 per ton, which was seen last quarter. PAT was down 63% on Q-on-Q basis, but that was mainly because of one-off impact. It was related to non-cash deferred tax charge on British Steel pension scheme. And even the net debt, that also saw a rise to 71,397 crore. Well, riding on this, the brokerages, they came out with a report on Tata Steel. CLSA has maintained outperform on Tata Steel at a target price of 125, while Morgan Stanley has also come out with a report on Tata Steel, and they have maintained equal weight at a target price of 110 per share. But they say that the European business, that will remain an overhang for the company in the near term. So that was on Tata Steel. It's up trending 3% as we speak.
Okay, let's keep an eye out on Tata Steel, but let's move on and talk about HUL on the charts. Kunal, I want to know about this FMCG company because this one has pretty much not done anything in the last 1 year. When you look at it, nothing exciting coming in terms of returns over here. Now, is HUL going to be a different story? What should we be expecting from HUL?
Well, my belief is that HUL, which had gone through a correction in last, I think, 3-4 weeks, start of the month of July, the stock was almost at 2,750 plus mark. Right now, the stock is at 2,570 odd levels, which means it's already gone through a correction of 150, 170 points for itself in this last 3 weeks. And now the indicators coming back into a deep oversold territory for HUL. So we've seen that for many of these FMCG names, Britannia, etc., that these stocks have gone through in the last 2-3 weeks, some corrective phases. Many of these stocks have entered into an oversold territory for themselves, and I would expect that HUL could also be forming a major bottom at current level. So my sense is, that the risk reward to go for a buy for HUL is extremely lucrative at current levels, and based on the contra signals, and I would expect the stock to come back towards at least 2,700 or higher levels than that. So from a short-term play, the risk reward could be very favorable for building long positions on HUL, even though the stock is showing some bit of correction over the last 2 to 3 weeks.
Okay, moving on, let's shift focus to the auto sector now. And Harsh, you have picked up 2 counters, Hero Moto as well as TVS Motors. Tell us what's the news flow.
Well, in fact, Srishti, it's the larger auto pack which is in focus today, largely on the back of a note coming in from HSBC. What they've done is they've downgraded Bajaj Auto to a hold from a buy. Target price is 5,400 on Bajaj Auto. We'll try and flash that on the screen instead of Hero Moto if at all we can. Also, we will. I'll quickly take you through what Eicher or what HSBC's views on Eicher is. They maintain a hold with a target price of 3,300. With regard to TVS, they believe a two-wheeler demand is likely to be sustained, and the unexpected recovery in entry segments could bring more upside, but competition is increasing across these segments. So they're liking the two-wheeler space largely, and on the back of that, both you can see TVS as well as Hero buzzing, but now they prefer TVS over Hero, at least currently.
Okay, that is the word coming in on TVS and Hero, but Kunal, you picked out Hero for us as well. Do you think in the auto pack this will stand out as a hero and keep moving and going forward?
Yeah, it looks like, because I think the stock has completed a flag pattern breakout. Technically, that I think is a strong signal of a rally as well as a consolidation getting over for the stock price. So my expectation is that Hero MotoCorp looks quite charged up yet again after a bit of a pause or a consolidation. The stock remained into an absolutely tight range. I think a 50-pointer range for Hero MotoCorp was something what we've witnessed over the last 7 or 8 trading sessions. So coming out of that in a small tight range, the stock is looking attractive. As I said, forming a flag pattern breakout on the hourly charts, and also I think on the verge of breaking past about the previous highs for itself around the 3150, 3200 mark on the spot level. So chart patterns look very attractive. The only concern is that the futures is into a discount for Hero MotoCorp, but I think that's been the phenomena since the last 1 or 2 weeks. Hopefully, with the start of the August series, we could see that change happening for Hero MotoCorp, where the futures may come back into slight bit of premium. View remains positive for Hero MotoCorp.
Okay, view remains positive for Hero MotoCorp. But let's move on, talk about Tata Rail. Why is this one in focus again? We have a note that is coming from HSBC. They're retaining a buy and given a target price of 750 rupees per share. What they say that the Q1 numbers, the revenue is more than doubled with a sharp EBITDA margin improvement, and the company is in a multi-year solid earnings growth phase with a good visibility on the growth and the good ROE is what they are expecting to see from the company. They're retaining a buy. They've raised the target price to 750 rupees per share, and that's clearly an upside of around 18 to 20% is what they're expecting. Look at the stock up move today as well, already seeing an up move around 6.5% as well. So yes, HSBC retaining a buy and hiking. The target price is keeping the stock of us as well.
Well, yes, absolutely. But moving on, and let's shift focus to Hindustan Copper. Kunal, this is the counter that's on your radar. Tell us how the technical setup looking like for this one.
Yeah, many of the commodity-related stocks, metal names are doing pretty well. Hindustan Copper has also moved up well from 120 as a zone. The stock has moved today to 124 plus mark. Looks attractive as a short-term play. In fact, many of these metal commodity plays are actually coming back into a breakout mode for themselves. So Hindustan Copper also looks attractive. I would expect the stock to now head towards the second leg of the target on the upside. 132 could be the next leg of targets for Hindustan Copper.
Okay, moving on, let's shift focus to the power space, and Torrent Power is the counter that is in focus, and at one point in time this counter was up as much as 5% after the company said that they have entered the electric mobility infra sector, where the company has launched the first set of the 4 EV charging stations in Ahmedabad, with 2 more likely to be launched in Surat. And on the back of that, after the company is seen to be foraying into the electric mobility infra, the stock was up as much as 5%, but with the markets is seen to be drifting lower, but nevertheless still holding a gains of 1.4%.
Absolutely, still holding on to gains of 1.4%. Let's move on, and Kunal, Gail is a stock that you have picked out for us at stock number 10. On the technicals, how is Gail looking like for you? Last 6 months, 13-14% return. What is it that one should be expecting now from Gail? Would it still be a buy at current levels?
We are at an interesting juncture where many of these PSU stocks are actually showing signs of a breakout. And these are the same PSU names which are actually been underperformers, since the last many months as well as over the last couple of years. Now, Gail is also one of them. The stock had taken huge resistance. I think the last 2 or 3 years, there were multiple resistance for Gail at the 115 odd mark for itself, and the stock is now coming back into a breakout mode. This time around, with the force that many of these other PSU stocks are showing, I would expect that Gail could also provide a breakout on the upside. So traders who have been waiting out for the stock to bottom out, or at least get into a breakout mode, or getting into that confirmation of a breakout, I think they should start looking at stocks like Gail at current levels. I would believe that if this major breakout in terms of consolidation or resistance gets over, we could be looking at a very strong upside for many of these PSU names, including Gail. So extremely bullish on the stance, and anticipating a breakout for Gail about that 115 to 118 mark. Potentially, the target range over the very short term could be as much as 15 to 20%.
Okay, moving on, let's shift focus to the IPO space, because just yesterday we have seen the new IPO of Kaizanchi Jewelers opening up for subscription till 28th of July. So going ahead, what is the outlook of the company? We'll try to decode all of that with the management, and for that we are being joined by Ashish Mehta, Chief Executive Officer of Kaizanchi Jewelers. Very good afternoon, Ashish, and thank you for your time to ET Now. Firstly, when the company plans to use the IPO proceeds for expansion, how many stores do you plan to open in FY 24-25? Tell us about the expansion plans going ahead.
So my company, Kaizanchi Jewelers Limited, we have come up with the IPO mainly for setting up a new showroom. So the capex for the showroom we require is 8.9 crores. For the working capital requirement of that showroom, we have asked 20 crores, and for the existing business working capital, we have asked 55 crores, and the rest is for general corporate purpose. So we are first we are setting up one new showroom, which is 10,000 square feet. The area of the showroom is 10,000 square feet, and we haven't we are planning to, but we haven't disclosed any of that expansion plans after one showroom. We'll be first reviewing the first showroom progress, and then we'll decide.
Right, Ashish, this is Vinny joining in the conversation as well. And what I want to know is, when you look at the growth rate in terms of revenue, as well as the profitability on a year-on-year basis, your profits have doubled. Revenue has also seen a strong growth. What has changed in terms of the strategy for the company in last 1 year? Could we expect this growth rate that we're seeing to continue for the company going forward then?
Yes, for sure. You can expect the same growth in the coming years. So, while talking on strategy, we have according to the numbers, like you might have seen, the turnover has doubled in terms of institutional sales. So we have doubled the turnover in terms of institutional sales. We were first targeting more bullion sales, and in FY 2021-2022, we slowed down the bullion sales and we concentrated much more on institutional sales, which in turn resulted in good profits in 2022 and 2023. 2022-2023 fiscal year.
Okay, Ashish, if we look at the inflationary environment, that is seen to be inching up, though it has moderated, but coal particularly is seen as a hedge against the inflation. How is the demand trend going ahead as per you, and what is the outlook on that front?
So talking about the demand, we've seen while looking on the numbers, the demand was the demand was good, and the price of the gold did not much affect on the demand, I must say, because the demand was quite good. And in this seasonal in this festival sale also, we had good numbers in the festive season. So the price, the value has increased. Maybe a bit of proportion, the quantity you can say, has decreased, and the value has compensated it. But the numbers wise, the sale is good, and the demand is continuously increasing.
Right, Ashish, also one thing that, the company actually operates in a quite highly competitive, fragmented market. So how do you expect market share gains? What's your long-term internal targets that you all are keeping?
In this, as you said, yes, our market is mainly, we are situated in wholesale market. So we are moving forward to an organized retail market, to setting up an organized retail market in our wholesale market, you can say that. And our targets, while talking on the targets, we are expecting a very good numbers, and in terms of number, we are expecting the same amount of the inventory turnover in the new showrooms also. So on the new showrooms, we'll be giving extra facilities to the customer, and by that we are expecting more number of footfalls in this store. Currently, the turnover of the company is 480 crores, and in this fiscal year we are expecting to go up to 780 crores.
Okay, with this, Ashish, we'll let you go on that. Thank you so much for joining us today on ET Now, and wishing you all the best for your ongoing IPO. But with this, viewers, it's time to slip into a short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back.